The discussion forward, our special coverage of Union Budget 2024. Shyam Srinivasan, MD and CEO, Federal Bank, is joining us now with his thoughts on the budget speech. Shyam, very good afternoon. Thank you so much for your time. The entire financial space, the banking sector is quite happy. The yields have fallen very smartly looking at the fiscal deficit number. Before I come about specifics, your early readings of the speech this time round as far as Finance Minister's speech is concerned.
Thank you. Yeah. There's always a temptation to try and rate every budget, so I'm not going to go in that direction. But let me say, the finance minister spoke of 3 Ds, right? Diversity, democracy, and the trinity of diversity, democracy, and demography. I'll try and characterize it with 3 Cs. I think it reflected commitment, consolidation, and confidence. So from my point of view, the takeaway was the 3 Cs. It stuck, and the commitment to honor many of the numbers that were pointed out in the budget last year have come through, or the glide path is clear. Consolidation is very clear. You also pointed out, I think the commitment and the consolidation focus around the fisc was clear. And if somebody had not followed India for a long period of time, and only heard the first 10-15 minutes of the speech of the Honorable Finance Minister, it was oozing with confidence. Every success story of the last few years and the developments made were visible. So I would say the budget would be characterized through these 3 Cs. In addition, it was crisp also, but these 3 Cs characterize the budget.
Very well said, I would say, very well said. Sir, what are your thoughts on the hint towards next generation of reforms? Clearly, the corporate India, institutional investors we speak to almost on a daily basis for the 9 years have been applauding that. A large part of the rally also in stock market has got to do with the confidence government has given out in terms of reforms. What are your thoughts? They're talking about areas which have not been addressed very well, perhaps the northeast, region or geography wise, and also hinting towards next generation reforms could be the area of focus. What comes to your mind? Which direction do you think they'll press upon further?
No, I think it was clear from the speech, and more importantly, the speech is just 60 minutes, what we've seen for many years. It's been fairly all round, right? Whether it's in the area of those 4 alphabets of Gyan and or the geographies that are imperative in terms of carrying large parts of India which are performing below the average and have been relatively less developed, whether it's the northeast, parts of the north itself, which have not stepped up. So I think it's going to be fairly broad-based, but the accent is clear to create an environment where ease of doing business should get easier or less cumbersome, and thereby unlock innovation. The 1 trillion that has been set aside as sort of a spurring investment into innovation itself is an indication of the kind of things that are going to happen. Or the money that has been set aside for, say, the ESG sensitive areas like rooftop solar, or stuff that have been focused around the infra development, all indicate it's going to be quite all round. And the job, I'm hoping those famous lines of, less involvement of government, but more, not to be come in the way of business, are beginning to come true. So I would think if these are honored, which looks like, that's why I said commitment and consolidation is visible, you should be able to see in the periods ahead a lot of private capex coming in and stepping in and developing on these platform. The digital public infrastructure is a story. What's happening on GIFT IFC IFSC is a story. All these set the tone for a considerable amount of investments flowing in the periods ahead.
Shyam, hi, good afternoon. Always a pleasure to connect with you. Nikunj also joining in. Shyam, I'll talk about something in a sense really is the wow factor for us in the budget. The temptation to stroke the rural economy is something which is the need of the hour. And the government in a sense had the bandwidth and the ability also to perhaps come out with a large popular scheme. But they've not done that. Isn't that the sign of maturity and sign of confidence that they are confident of the mood of India B, also they understand that the economy is moving?
I did mention at the opening part, Nikunj, the three C's, right? The confidence, the commitment, and the consolidation. When you look through the lens of, has it been populist or have you done something specific for rural to stoke rural, you may not directly see it. But I think the high point of the budget, as I see, is that a lot of nuanced stuff has happened and it's not screaming headlines. So I would think you should look this both as direction and more important, the stuff that is being done are not very near term in nature. It's they're creating the infrastructure. And once you create infrastructure, all of us know that I think that's the essence of any good budget, right? Create the capability for people to succeed, create the environment for people to succeed, create the capability for money to flow in. And I do think from that lens, whether it's rural and or specific geography, specific segment, there are enough enablers. And we must see this as a continuum. I'm hoping when the full budget comes up in June, July, whenever, you will see many more which starts building on this.
Sham, I'll also like to draw your attention to specifically the fiscal deficit number. Fiscal deficit number much better than what all of us anticipated. Now there is India's bond inclusion, which will also happen in the month of June or July. We could be looking at a different kind of flows coming into the bond market. So do you think this budget, in a sense, has a very strong hint towards why cost of capital in India structurally should come down? I mean, is that something which we can say that a bond market ka budget hai?
Very true. I won't characterize as bond market ka budget hai, but certainly direction is clear. In many conversations we've all seen, right? The developing to development, really the Viksit Bharat direction that the country is going. Evidently, you have to start mimicking many international geographies in terms of developed markets, in terms of how capital is and the cost of capital. And through all these initiatives, I can see that our market will mirror or even be ahead of some of these advanced markets or developed markets where access to capital, availability of capital, cost of capital, all will be a lot easier and lower. And which means business models of particularly financial institutions, banks will start changing. And I do think we are at that cusp where the transition is evident. And it also gives RBI, the regulators, scope to revisit rate decisions. So I think it's directionally a good outcome.
What is the missing link in this budget? I never thought that as a market commentator, I would struggle to find difficult questions because you always have something to criticize when it comes to budget. But this time, I am running out of ideas, so I'm going to throw it to you and make your life slightly hard.
See, there's always a long wish list. If you want a 10 on 10 budget, you'll have always some wish list that, through which lens you look at it. You pointed out something around the rural. I heard somebody else point out saying that, there's not enough done for the salaried. So there will always be something, but we have to recognize, having been around for long, we realize that it's a trade-off. You have to find out within the architecture of what you want to create, what's the best possible. I think the big message in this is the fiscal consolidation, honoring the commitment to bring it down to 4.5 with a glide path. I think is a good outcome. It signals many good things. Continuing to spur capex, be it public or private. If you see the capex between two budget cycles, it looks like only 10-11%. But if you look at it a 4-5 year continuum, it's a CAGR of 20%, 20% plus. Which is a good thing, which means the base has been created. So I do think we don't have to struggle hard to find out what is the negative. We can live with all the good stuff and keep building on it.
There was an explicit mention of tourism. And if the religious tourism stroke the Ayodhya experience is anything to go by, that is something which I guess nobody envisaged 3 years ago, that tourism can be such a big needle moving effect. Do you think, given that finance minister has already mentioned it in this budget, more and more things would be coming out from you? Right now we say Kochi is the place for tourism, but soon we'll be talking about many more places for tourism.
I totally agree. I mean, recent few months, on many instances, driven on many of the highways, either me or members of the family, we've come away incredibly impressed with the kind of roadways development that have happened. In all these things, commute is one, the comfort that in terms of stay and where people take breaks and in the Swachh Bharat equivalent, if those really gather momentum and we honor it, I don't believe we need another geography for tourism. India is the place. And like you pointed out, there's a report by one of the fairly known houses yesterday I read on the religious tourism-led economic growth. It's quite compelling and doesn't look like an unreal activity, right? If you have the Tirupatis and the Varanasis and the Ayodhyas and a few more all done up well and attractive. One of my colleagues during the Republic Day break went to, I think, Nashik. He said it is the traffic and the crowds were just unbelievable. So you can quite believe that this is now going to catch fire and probably stoked well, will be very productive for the country. Hotels, tourism, road, you name it, all of that will come into play.
If 2020, the need of the hour was survival, we were coming from COVID. 2021 was revival, bring in the capital expenditure, start spending. That is what revived the economy. 2023, to some extent, it was really about stability in terms of tax regime and meeting the government, commitment going. So, do you think 2024 and beyond, it should just be status quo, just maintain status quo, and things will move like a charm?
No, I am repeating myself in another conversation with you. I spoke about the revival, survival, revival, and then I used a new word, if at all such a word exists, thrival, right? And I think we are at that phase. I don't think it's just status quo. Status quo is like bare minimum. I do believe many reasons why India should look at things, both optimistically and with confidence, and continue to keep the good work going. I am convinced, be it tourism, be it startup innovation, be it the digital public infrastructure, be it the relatively high quality cross-border capability that most businesses are building, this can be quite special. And if the China plus one truly starts taking shape, money will flow in and India will be, well on course to, I keep hearing on your channels very often, the 8 trillion market cap country, faster than we will be 5 trillion in economy.
I sincerely feel, which I mean it, based on my experience and calculation, that stocks like Federal Bank have a long way to go. They are cheap, they are growing, balance sheet quality is there, and the bond portfolio now, given that if interest rates come down, would be significantly better. So I'm tempted to ask you one final question. Are you ready for that, sir? And this is not a trick question, but are you ready for my final question?
Please go ahead.
Why is ET now Shyam Srinivasan's
Line, sorry, ET now?
No, sir, you are dodging my question. Why is ET now Shyam's favorite television channel?
Is ET now Shyam's favorite television channel? Oh, okay, thank you. Good. Yes, I think you guys have been quite balanced in your questioning and asking us stuff that is strategic in nature. So I'm happy to be associated and talking to you about stuff that is longer range and not here and now, but consistently talk about the future and the developments happening on that. So yeah, thank you very much for that.
Right food for thought, Shyam. What I've appreciated about your whole, approach is that you share the big picture. You don't shy away from, giving the big picture. If there are some cross points also there, and you've always said that, look, do small things, do them right, be patient, and then the turn of cycle would be so brilliant, which I can see in Federal Bank numbers, that it's great. By the way, I've been told that the profit expectations for next year, which could be about 4,000 crore, that will make you to the elite club. That only 50 countries in India have that kind of a profit growth scope. Is that correct?
Yeah, I also picked up the number. There are not many companies which have 4,000 and plus, but allow me the luxury of delivering it before I speak about it. But yeah, we are pursuing that, Nikunj.
Stay with India, rise with ET now, bank with Federal Bank, and come more often on Nikunj Dalmia shows. Can I say that's a good way to wrap today's interaction?
Rise with India, surely yes. Happy to come on your shows. We'll keep performing. I hope it produces the right outcomes. Thank you so much.
Well, thank you very much, and I certainly hope to see much more of you going forward. Cheers, sir.
Thank you. All the best. Thank you so much.